And see time is around 8:30. Let's look into 22nd and 23rd Bitcoin trade analysis. So I have mentioned to you earlier, guys, if you look into a daily time frame analysis, what I have mentioned is that you can see this rejection candle on 20th of April, the market rejecting price from lower levels and 9 as well as 21 moving average and closing above the 200 moving average, clearly signifying bullishness, guys. So what I expected, and I have told you in my previous videos, if you go and watch, the market will go and target this liquidity over here, this liquidity, and even this liquidity, and there is a very good chance the market might go and reach this liquidity as well. You can see these are the next liquidity zones, guys, where the market would go and target here. But you can see the market here targeted this liquidity over here. So let's look into a 5-minute time frame and analyze how the market you could have taken trades. In my previous video, I told you that this is the last down candle before the up move, where the market came all the way rejected price from this 200 moving average. This is kind of rejection candle and closing above this range. So what you could have considered is that if you consider this to be an order block level, guys. So, but there is fair value gap below as well. You can see the market has not mitigated this fair value gap. So definitely you should look for the last. But here the market mitigated this fair value gap with this swing momentum over here, which I have mentioned to you as well. The swing over here, this is the swing, guys, which changed the market sentiment from being bullish to bearish. Sorry, from bearish to bullish, and this is the chalk formation over here. And we should wait for whether the price is respecting that levels or what. So if you consider the low to high of this candle, we should mark the optimum trade entry zone, which I have told you as well. This is the optimum trade entry, guys, where the market would come and mitigate these levels over here. You can see once the market mitigated this optimum trade entry levels, the market rejected price and closed above this 200 moving average. Again, the market came, mitigated this optimum trade entry zone and further continued bullish momentum. And the market mitigated all those fair value gaps here. But here you can see this is the last down candle before this up move, which broke structure towards the upside. You can see a clear break of structure, again signifying bullish momentum, guys. Even the market broke this structure as well. But you can see this is the last down candle which broke this structure, and this structure towards the upside. But if you consider this momentum to be an order block level here, if you try to plot this order block level here, you can see there is fair value gaps below this order block level where the market has not yet mitigated. So you can expect the market to come and mitigate it, this fair value gap in the discount area and continue for the bullish momentum. And that's what happened, guys. You can see the market came and mitigated this demand over here and continued for the bullish momentum. And I have told you in my previous video as well. So if you consider this bearish momentum over here, so if you consider the high of this candle to the low of this candle, once if this 50 level has been broken, the 0.5 levels of this has been broken towards the upside, and you can see this candle which broke the 9 as well as 21 moving average towards the upside as well. So this is the retracement, guys. So retracement and price rejecting and continuing further bullish. So you can take your position here itself, but there is a high chance that the market might, after this kind of bearish momentum, the market might reject price from these levels and continue further bullish, bearish towards the downside. So you should wait for another confirmation of this candle like this, which broke towards the upside. And in case if you try to plot the day VWAP level here, you can see the market breaking the 921 moving average as well as the day VWAP level and price rejecting from 200 moving average. All this confluence clearly signifying bullishness, guys. So you should take a long position here, keeping your stop loss just below that candle. And for target levels, this is my target level, guys. The first is this swing momentum over here, where the market came and mitigated this order block levels. So let's try to plot this momentum over here, the common point between this, to the common point between this, to the common point between this. This is the first levels where the market initially formed a chalk formation, and you can see the 2.6 level where you could have targeted. This is one confirmation, guys, where you could have taken long position in case if you could have taken long position. And if case if you consider this swing momentum over here and try to plot the Fib extension levels, the common point between this to the common point between this to the common point between this. So you can see the market both are in confluence, guys. The 2.61 level over here. You can see if you try to plot the Fib extension here and Fib extension here, I think this zone over here both acts as a confluence for you to take profits over here. So you could have easily execute your position once the price has reached over here. And you can see after this kind of huge momentum, the market retraced and failed to make a higher high. Instead, the market broke structure towards the downside, forming a chalk over here. clearly changing the market sentiment from being bullish to bearish. And you can consider this to be a failure swing as well. So whenever you consider failure swings, guys, there is a high chance that the market might break this failure swings towards the upside as well. In case if the market would have swept this high and swept this high, guys, the high resistance liquidity level, the market would have swept and formed a chalk. Then I would have considered it to be a very strong resistance levels. But here you can see the market failed to make a high. Instead, the market broke structure towards the downside, and you can consider this to be a low resistance liquidity run as well as a failure swing as well. So in case if you try to plot these levels over here, and if you consider this whole impulsive momentum as one single momentum, guys, so if you try to plot the fib levels over here, the high of this candle to the low of this candle, you can see price rejecting from 0.38 level. But what we need to see is the previous demand over here, guys. You can see this kind of huge impulsive momentum. So what we need to see is that this impulsive momentum, which broke even this structure towards the upside, clearly indicating the market sentiment being bullish. And even in intraday bias also, what we have considered is that the market sentiment is bullish itself. So we should always look for support zone, guys. So what we can see is that if you consider the common point between this to the common point between this, you can see the market coming and mitigating these 50 levels over here and mitigating these fair value gaps as well. You can see this is the 50 level. And even though the you could expect why the market has not retraced to optimum trade entry zone or any of these zones because there is no fair value gap here. There is no point of market coming all the way to this level. So here you can see there is a balance move here. You could expect the market to come to this level, but you can see what we need to see is the market structure shift, market changing sentiment from being bullish to bearish. So what you can see here is that market broke this structure high, guys, clearly indicating chalk formation. So if you consider this swing momentum towards the upside, and if you plot the low to high of this candle, you can see the market came all the way to this demand level here and didn't reject price from this optimum trading place zone, guys. Instead, the market came all the way towards the demand zone over here and further broke structure towards the upside. You can see again the market broke structure towards the upside. So if you consider this swing momentum, you could have waited for retracement of 50 levels. So you can see, but the market broke structure towards the upside, guys. You can see this swing momentum here. This is the 50 levels, but with this swing momentum, the market broke structure towards the upside. So what we could have considered is that the market retraced all the way to mitigate this fair value gap over here. You can see this fair value gap coming and mitigating. So this is why the market has come, guys. In case if the market sentiment would have been very strong, the market would have further broke this structure low as well and again retrace to somewhere these levels and continue further selling towards the downside. But instead, you can see the market taking structure towards the upside, clearly indicating bullishness. And again, the market broke structure towards the upside side. So if you mark the last down candle to the last up candle, what you can see is that the market here rejecting price from 50 levels. But what you need to see further here is that there is some fair value gap over here. You can see there is some fair value gap over here. So the market came, mitigated this fair value gap, and you can see this kind of rejection candles, guys, and as well as the 50 levels here. Both are in confluence, so you could have taken your position either here, guys. The 50 levels over here. This is where you could have taken your position, or you can take you have to could have taken your position here. But I think this is better confluence for you to take long position because you can see the market here is trading above the VWAP level as well as the 200 moving average, and you can see this kind of rejection after this kind of huge impulsive momentum, clearly signifying bearishness, bullishness. And for better entry and a one candle stop loss, what you could have considered is this high to low of this candle, the common point in this. So the common point in this, you can see once if this 50 levels has been broken towards the upside, or if you consider the swing momentum over here, guys, you can see the 50 levels being broken towards the upside and the price closing above the 9 as well as 21 moving average. This is where you could have entered, guys, keeping your stop loss just below that candle itself. So I hope you're understanding. This is where exactly you could have broken this candle, which broke the 9 as well as the 21 moving average towards the upside. And in case if you try to plot the anchor VWAP level here, guys, so let's consider this is the last down candle. So you can see price taking support here and continuing for the bullish momentum. Or if you try to plot here, you can see this candle over here taking support and further continuing bullish, guys. And here is where you could have plotted the fib extinction levels, the low of this candle to the high of this candle to all the way to this low of this candle. So what you could have targeted is look at this, guys. If you try to plot the common point between this, so let's use the common point. I think this is best. As you can see, if you try to use it, you could have targeted it all the way to 4.26 level over here. You can see, and our overall sentiment was bullish only, guys. So you can see the market coming all the way towards the 4.26 level, and you should wait. You should see these swings over here. So the market targeting this swing, or the next swing is this swing over here, guys. So this is our target levels, targeting this failure swings and targeting this failures swing. You can see the 4.26 level is in exact confluence with the 4.26 level. Uh, so this is where you could have exited your position, guys. So I hope you're understanding what I'm saying. You could have captured this very good bullish momentum, guys. And again, the market came mitigated this order block level. You can see there is a fair value gap over here. This is the fair value gap, and this is the order block level. This is a 5-minute order block level where the market impulsively broke structure towards the upside with imp with fair value gap, or you could have plotted the optimum trade entry zone base. If you consider the common point within this, to the common point within this, you can see exactly the market coming and taking support from this optimum trade entry zone over here, the 0.86 to 0.5 levels over here. This is the optimum trade entry where the market is trying to take support from these levels. So the order block level, the optimum trade entry, and the fair value gap, everything showing confluence, guys. And what you can see is after the market showing some sort of rejection of price from these levels, and the market breaking these structures towards the upside. So what you could have done is to wait for a clear change in market sentiment, guys. So in case if you could have either entered long position here, or you could have waited for better confirmation like this, the market forming a chalk over here, and then this is the last down candle which broke structure towards the upside. So if you consider the low of this candle to high of this candle, you can see again the market rejecting price from this optimum trade entry zone over here. This was another entry where you could have taken long position. One is here, guys. Another trade is here. So let's try to plot the Fib extension here and Fib extension level of here as well, and see in case if both swing any confluence over here or what. So the common point between this to the common point between this to the common point between this. So what you could have targeted is that you can see in case if you're trying to hold your position, but here is where the market aggressively is sold off. So this is the 2.6% over 6 level target where you could have targeted here in case if you could have holded on your position. But here you can see this is 100% target as well. You can see exactly the market came, rejected price in case if you might have entered it here, right? The 100% here you could have entered, you could have exited this 100% move. But again, you can see the market retracing, and if you try to plot the Fib extinction level here, the common point between this to the common point between this to the common point between this, common point between this. So what you can see guys, the 2.6 level, both are in confluence over here. The 2.6 level, you can see which I have marked you here, the same levels over here, how exactly the market came here. This also the market targeting the 2.68 level, lying close to each other. This is exactly you could have taken, guys, one long position here, keeping your stop loss just below the order block level itself and targeting it all the way to this high over here. Or either you could have considered the fib of the order block in case if you want your stop loss to be as tight as possible. You can consider the fib of your order block as well. This is, you can see, and again the market coming and trading at the optimum trade entry where you could have taken another long position and seeing this kind of rejection, clearly indicating some sort of bullishness even after this kind of huge impulsive momentum, and targeting it all the way to 2.6 level over here, guys. I hope you're understanding what I'm saying. This momentum towards the upside is where you could have targeted, and we can see how bullish the market here is, guys, and clearly indicating the market sentiment to be very bullish. Here you can see, if you consider this impulsive momentum towards the downside, the last down candle before it moved structure towards the upside. If you consider this swing momentum over here, you can see the market is trading above this level itself, is clearly indicating some sort of bullishness only. So this was on the next day, guys. You can see the market. If you consider the 1 hour time frame analysis, let me show you. If you consider this impulsive momentum, the market is trading above the upper limits only, guys. So if you look into a daily time frame on that video, you can see this kind of huge bullish candle. And the next day, the market is trading in the upper limits only. So we should look for reversal only when the market is sweeping above these highs. You can see the market over here staying above the 0.38 level itself. So let's look into a smaller time frames and see how you could have traded it after a huge bullish momentum day. So what we need to see is to plot the daily VWAP level. You can see this is the daily VWAP level where you could have taken some sort of confluence over here. You can see here the market sweeping this high, guys, clearly indicating, you can see the sweep of this structure over here. This market swept this high and closed within this range and formed a chalk over here. You can see clear chalk over here, clearly indicating some sort of bearishness. So after this kind of huge impulsive momentum, what you could have done is to plot the fib levels here, the common point between this to the common point between this. You can see the market rejecting price from 550 levels. This is the 550 levels where market is rejecting it. So in case if you try to enter this position is the common point between this to the common point between this to the common point between this. So you could have targeted it all the way to this 100% move over here. So this is where you could have targeted as the initially you could have targeted this liquidity, the equal low liquidity over here. You can see the market would have come and broke this and swept this low over here. So you could have targeted the 100% move. This is the 100% move, guys, where you could have targeted it all the way to this level. Or the first thing is to target this swing over here. You can see a clear breakout structure over here. So after this breakout structure, what you could have done is you could have tried your stop loss to some of this swing over here and consider the market momentum to continue further. Even if you have entered your position, you could have tried your stop loss to break even or anywhere along these levels, guys, expecting the market to go further. But you can see here the market taking support and trying to come all the way to these levels over here. Or if you consider this swing momentum over here, you could have expected the market coming all the way to this optimum trade entry zone over here. So let's mark the 50 levels or optimum trade entry. You can see the market rejecting price from optimum trade entry zone over here. So you could have just break even in case if you might have entered your position here, you could have break even or you could have waited in case if the market might continue further. So this is the optimum trade entry zone where you could have expected the market to come. But instead the market after rejecting price from here failed to make a lower low here, guys. The first indication is that after this kind of huge momentum, you could have expected the market to come all the way to this 100% bull, but the market failed. Instead, the market retraced to optimum trade entry, but again failed to reach all the way to this level over here. Instead, the market broke structure towards the upside. As you can see, a clear chop formation over here, changing the market sentiment from being bearish to bullish. So this is not what we have expected, guys. So after this kind of momentum, the market failed to make a lower low. Instead, the market broke structure towards the upside. So if you consider this swing momentum over here, you can see the market again taking support from the 0.38 level over here, clearly indicating the market sentiment being bullish. You can see this kind of retracement to 0.38 level. So what you could have considered here is that after seeing this support, guys, there would have been high chances the market might continue further selling. And how can you think that the market might take support here? So let's try to analyze and decode how you could have considered this to be a support. So if you try to plot the swing over here, anchor way up level, you can see price taking support. And what you can see is the candlestick formation. If you consider this retracement, guys, rejection of price. So if you try to plot the high to low of this candle, you can see the 0.5 levels over here being broken towards the. Either you can wait for the neckline breakout, guys, or you can better is to wait for this 0.5 levels to be broken towards the upside, as well as the candlestick formation, as well as the VWAP, as well as the moving average. Everything will fall in confluence if you try to see the retracement levels of this 50 levels and consider how you could have taken long position or short position. So if you mark the 0.5 levels, guys, you can see the market breaking the from here, the market rejecting price from 0.38 level, as well as the 21 moving average, as well as the 9 moving average, and breaking the day VWAP level. You can see this is the day VWAP level, marking and closing above this range, clearly indicating bullishness, guys. So what you could have just done is to keep enter your positions, guys, long position here at the 50 levels, keeping your stop loss just below the 0.38 level and targeting it towards the upside, guys. So this was one entry where you could have taken, and for target levels, I would further tell you. And you can see again the market broke structure towards the upside as well. You can see even the previous swing also has been broken, clearly indicating market structure shift from being bullish to bearish, from bearish to bullish. And if you consider this swing momentum is, so if you consider the common point between this to the common point between this, you can see again the market coming all the way to this 50 levels over here. The equal low liquidity is swept, and the market came and mitigated this 50 levels over here. And again, the market broke structure towards the upside. So this was another entry where you could have taken at 50 levels. So this was one better entry, keeping your stop loss just below that candle itself. And you can see again the market broke structure towards the upside. So this is another breakout structure. And if you try to plot the fib levels of this swing momentum, the low of this candle to the high of this candle, you can see again the market taking support from 50 levels over here. This is another 50 level, guys, where price is trying to take support over here. So this was one entry. Or in case if you try to plot the anchor VWAP levels of this swing momentum, you can see the market trying to take support over here. So let's try to take this anchor gap levels out, guys. This was another entry, guys, keeping your stop loss just below this candle. Or you could have waited for retracement. Guys. In this retracement, now the market breaking this 50 levels, you can see after this kind of bullish candle, you could have entered long position. Or after this kind of bullish candle, you could have entered long position and targeting it all the way towards the upside. So let's consider the first swing momentum where you could have entered it here, guys. This was an entry, this was an entry, and this was another entry. So let's plot the fib extension levels of this first impulsive momentum towards the upside. So the common point between this to the common point between this to the common point between this. So what you could have targeted is all the way to 2.6 level over here. You can see, guys, the 2.6 level where you could have targeted it, or the 1.6 level over here, or the 100% move. So let's keep it 200% move. Let's not, let's see in case if you see the 200% move coming all the way to this levels over here, or you could have tried your stop losses too. And in case if you try to plot this fib extension levels, guys, the common point between this to the common point between this to the common point between this, and see how you could have targeted. So you could have targeted here the 1.68 level over here. So you can see the 2.6 level over here is in confluence with 1.68 level over here. So either you could have targeted it all the way to 1.68 level, or in case if you might have entered here, guys. So the Fib extension levels of this swing momentum, the common point between this to the common point between this to the common point between this, you can see again you could have targeted the 1.68 level over here. I hope you're understanding, guys. There are three confluences whereby you should have exited your position at this zones over here. So I hope you're understanding what I'm saying, guys. In case if you find my videos helpful, guys, please like, share, and comment. See, you can see either along this trend also you could have either entered long position, guys. I did ask you to enter at this momentum. You could have either entered after seeing this kind of rejection candle from 9 as well as 21 moving average and market closing above these levels. So if you consider this swing momentum over here, the market breaking the zero point 0.5 levels towards the upside. Here you can see the market breaking the zero point 0.5 levels towards the upside, and as well as the market rejecting price from anchor gap levels. In case the market rejecting and closing above. Here itself you could have taken position, but I'm not asking you to take position here, guys. I'm just asking you to better confirmations here itself. So I hope you're understanding, guys, what I'm saying. So this was one best entry where you could have taken, and the market sweeping these highs and continuing aggressively towards the downside. And you can see the market here very aggressively sold towards the downside. But you can consider this swing momentum, the market failed to sweep above this highs, guys. You can see this is another low resistance liquidity run. So the market clearly broke structure towards the downside. So this is a clear chalk formation. So what you could have expected is the market retracing all the way to this order block levels over here. You can see this is the last up candle where the market came and mitigated this order block level. So this is a 5-minute order block, guys. So you could have either expected the market rejecting price from these levels and continuing further selling towards the downside. But instead, you can see the market sweeping the highs of here. This is a high resistance liquidity one, guys. You can see this is a very strong resistance level. You can see this kind of huge rejection candles from higher levels. So the market sweeping this highs over here and again forming a chop over here. You can see clearly the market closed below this low over here, forming a breakout structure, or you can consider it to be a breakout structure. You can see this kind of rejection candles from higher levels. The high of this candle, and even didn't respect these order blocks, but definitely reject price and closed within this range. So either you could have entered somewhere here, but what you could have seen here is that the market again further breaking structure towards the upside, downside. You can see clear break of structure. So if you consider this break of structure towards the downside, and if you try to plot the fib levels here, the common point between this to the common point between this. So let's consider the common point between this. What you could have done is to plot the optimum trade entry zone over here. As you can see, this is the optimum trade entry zone where you could have just plotted it. And you can see the market rejecting price and closing below this optimum trade entry zone itself. So if you consider this retracement towards the upside, guys, and you could see the plot the 50 levels over here. This is the zero point 0.5 levels where you could have either you could have entered your position, keeping your stop loss just above that candle. This is where I have entered one short position, guys, keeping my stop loss just below above that optimum trade entry. And what I have done is to plot the fib extinction levels over here, the common point between this to the common point between this to the common point in this, and this is where I targeted. So if you consider this common point between this, so you could see clearly you could have targeted the 1.68 level over here, guys. somewhere along these levels where you could have exited your position in case if the market is not perfect. And what we need to see here is that there is a fair value gap over here. So you could have expected the market to come and mitigate this fair value gap because this market's at this high resistance liquidity event and continued further selling towards the downside. So you could expect some kind of bearish momentum only. So what you could have done is to target it all the way towards the downside over here. This was one best entry where you could have taken it, guys. There would have been high chance the market might continue further selling towards the downside, but you can see again after this the market rejecting price and showing some kind of bullish momentum. And here you can see the market trying to break this structure towards the upside. You can see this is another break of structure towards the upside. And if you consider the swing momentum over here, the low of this candle to the high of this candle, you can see the price didn't retest to 0.38. You can consider this to be a single swing. So if you consider the market from here, guys, the common point between this to the common point between this, you can see the market retracing to 50 levels. But what you can see is that the market here broke another chalk formation towards the downside. So, and you can plot the 50 levels over here. Either the market taking support from 50 levels, or if the market sentiment is bearish, the market would reject price from these levels over here, the optimum trade entry zones or the 50 levels. You can see, guys, the market failed to make a higher high. Instead, the market rejected from optimum trade entry zone. This is the optimum trade entry zone, and further the market continued bearish, guys. So there is a very good chance the market might continue very aggressively towards the downside. So what I'm asking here is to keep your stop loss just above this candle itself and targeting it towards the downside, guys. So there is a very good opportunity for you to enter long short position, and you can expect the market coming and sweeping this liquidities over here as well. So you could have you can target it all the way to this levels as well. There is a very good opportunity for you to take short positions, and either you can target these levels over here, guys, the order block level over here, or you could have target it all the way towards the downside as well. So you can expect a huge downward momentum towards the downside. Towards you can expect huge downward momentum, guys. As you can see, the market showed a aggressive momentum towards the upside. Again, took support from 50 levels, but failed to break this high, guys. Instead, the market sentiment would have been bullish. The market would have broke this high. Instead, the market rejected price from this swing momentum, where the market formed a chart, and rejecting price from optimum trade entry levels and continuing further bearishness. So there is a very good opportunity for you to take bearish trades. So if you plot the levels over here, you can see the market rejecting price from these levels as well. So better to take short position is so you can expect the market to come all the way. And this is my minimum target, guys. This is my minimum target, and this is also my target. So there is a very good opportunity for you to take all the way to this levels over here. And in case if you try here, guys, you can see the market clearly broke structure towards the downside. And what we can see is that here the market formed another break of structure towards the downside and even breaking this low as well. So again, the market retraced all the way to this order block level. See, this is the last up candle before it broke structure towards the downside and it can continue further bearishness. So in case if you try to plot the Fib extension levels, the common point within this, to the common point within this, to the common point within this, so you could have, you can clearly target the 2.6 level over here or the 3.68 level. So let's consider somewhere along the 2.68 level or here. Like the 3.6 level is what I'm considering as of now. So so this is the 3.68 level. So I would like to target it all the way to 3.68 level. So I would be posting this live trade. I will be explaining this to you further in next video, guys. So I hope you understand it. And you can trial your stop loss above this level itself. So there is a very good opportunity for the market to come all the way to this level, guys. That's it about my trade analysis, guys, in both in yesterday's 22nd and 23rd Bitcoin trade analysis, and why you should always look into a higher time frames and trade, guys, better than looking into a shorter time frames and trade. See, in a 2-day time frame, I have explained to you one best entry, two, three, four, five, six, seven, guys, eight beautiful trade setups where you could have taken, and one live nine, one is on live trade which I have mentioned to you. This is 9 trade entry as well. So these are my Bitcoin trade analysis, guys. In case if you find my videos helpful, guys, please like, share, and comment. Share with your friends and family as well. And keep supporting my YouTube channel, guys. Hope a better videos and a better profits I'll be uploading to you in further coming days. Keep supporting, guys. Thank you.